Jayesh Mehta is with us now to talk to us about what the currency market will do. The rupee is open. Dollar rupee will. I think we'll have. We'll talk about this with Jayesh Mehta, who's with us, Vice Chairman and CEO at DSP Finance. Jayesh Bhai, good to have you with us here as always. Thank you for your time. So where are we headed near term? You think the worst is, we've seen the worst for now, or this is going to be a gradual, painful sort of move lower?
So I think it's more to do with U.S. equity and, like yesterday you guys were talking about U.S. exceptionalism. So that would continue at least till the election, and maybe, maybe then it's a hope trade that maybe it continues for another 1 month, 2 months, or whatever it is. But it has to change. The narrative on U.S. equity will change, and the narrative might change for higher rates and lower equity in U.S. And that will still fuel a little bit of the dollar strengthening. But that would be good. That's when you will start getting the EM flows, and that's when the things would reverse. But till that time, another 1-2 months, we don't know. Hopefully just 1-2 months, and we should be okay. But it's nothing dramatically, but it's only U.S. trend. Of course, we should let it go where it was to settle. And then its only time is when it is changing back. We should not intervene much and let it appreciate when it is changing back. But we don't know what is the timing when it is changing back.
Okay. The only problem, Mr. Mehta, is that in the past, when there's been a problem in the US, investors look out for EMs. And now you don't know what this new administration is going to do to EMs also with all this tariff talk, which is really my next question. I mean, the depreciation is not just the rupee's problem alone, right? We've seen that play out across a lot of currencies, including the Chinese yuan. What's the chatter in the market right now, Mr. Mehta, with respect to the RBI's approach towards this? Because this is a new beast that we're looking at, right, in terms of what happens on the tariff front. So could the RBI adopt a slightly more different approach and let it drift to where it wants to drift, given that we could be looking at some sort of tariff war, trade war, etc., till things settle?
So that will come to know only post 20th, or maybe not even immediately. 20th is just the swearing, right? So that's why I keep on saying 1 month, and hopefully, political rhetoric and actual tariff war maybe not that bad, right? Because at the end of the day, every politician in the world knows that inflation is the biggest loser, right? So if you put too much of tariff war, the country suffers, right? And therefore, inflation would suffer, and therefore, you still will have higher rates with so much of fiscal deficit. So that doesn't make sense, hopefully. But we'll have to wait because nobody knows what he's going to do. Let's be very clear. Everybody's just guessing what he's going to do, right? And from that perspective, even nobody knows what he will be allowed to do, because at the end of the day, he can right now say many things because he's still not the president. But once he becomes president, there will be a lot of things he will be guided by. And I think he has a pretty good team he's building up on the treasury side and on the fiscal side and all that. So hopefully that should not be that dramatic. But that's a hope trade, as I said. But till the time U.S., one is right now U.S. equity versus EM. So that is continuing. Once that euphoria particularly gets over, it will be U.S. dollar rates. That will continue. It's only after that when people start looking at EM market, which will happen. We don't know the time, but that's the thing.
All right. Good morning, Jayesh. Always good to see you in. Thanks a lot for joining in. Well, could you give us some levels on the rupee? If you have in mind, if you could give us some rupee, some levels, point number one. Point number two is, we got into the year expecting the Fed to cut a couple of times at least in this year. Now it seems, the global backdrop has changed. In this backdrop, what do you expect the RBI to do? How many rate cuts are you factoring in, and from when?
So I think from a level perspective, it's very difficult to say. As I said, we can't even predict what the timing, right? It's like whether things change in 1 month, things take 2 months to change, right? So it becomes very difficult. But ballpark gut feel maybe at around 88, 89. So to start feeling the value into currency, other EMs, including India, right? So at some point of time, people will start feeling value in EMs. So that's where the things can change. In terms of more than India, I think the U.S. rate cut expectations have gone off. And that's where the longer for higher rate kind of situation. And so even if their equity market falters, which people feel it is, overshooted their earnings and stuff, then it's the people will say, okay, U.S. bonds, right? Because it's very attractive at 480 and stuff like that is very attractive U.S. bond market, right? So that kind of things will keep on coming. I think for India, I think we will have to wait for the new governor's stance. When traditionally people may say it is stupid to cut rate when your currency is under pressure, but currency is under pressure for a different reason, right? Currency is under pressure, not that people are doing an interest rate arbitrage between India and US. So if you cut rate to fuel growth, it's perfectly fine.
Well, a lot of complicated moving parts over here. Jayesh, we'll see how this plays out over the next couple of weeks. Thank you very much for joining in. For what it's worth, the rupee's pulled back at least a little bit from yesterday's lows. I mean, there's a mild appreciation, about, I think, 15 paise or so from yesterday's levels. There we go, 86.49 on the screen. Make that now just about 8 paise.